And I just want to send a special welcome, not only to the viewers, but to the members of the NCCU. We have 52,000 members.
That's like the population.
And that is growing. So members, welcome, and we're going to have fun tonight. Thank you.
Okay, great. So we are going straight into it. So Rosemary, shopping. Are you shopping?
I know.
But, but I'm going to give you an opportunity to tell our viewers what is Shopee and why they need to create an account at Shopee.
Okay, so as I mentioned, Shopee is your one-stop bill payment solution. So basically, you just think of it. Stop the hassle of running around. You want to pay multiple bills. You want to pay, for example, right now, you could pay your flow bill, you could pay your insurance, you could pay your DOAS. You come to one place and you have all those bills paid in less than 2 minutes, 3 minutes, and walk out, having the confidence that that bill is paid and that information is transmitted to the biller. Okay, so we basically handle the payments for the billers, and you won't have to think about running up there. I mean, think of the time you could save, really, and we're looking at our sub-thing here in this small group is time is money, and just think of the time you could save instead of having to run to several locations in your little lunch hour, and you could have all those bills paid in one location. But as I said, the model is not just that, where you could pay at, let's say, our main office, which is 33 Kennedy Avenue. We basically set up around the island. So you could go to Phone Shack in Roseau, for instance, and have those bills paid. You could go to Green Supermarket and have those bills paid. You could go to Bullseye Pharmacy. You could go to Phone Shack in Portsmouth, and we're expanding. So you will hear about all the other locations as well. So in that way, you have options. And that is the nice thing about Shopee. It's really a convenient way to pay, and you have options. So don't even think about, everybody's going to come to that one place, so the lines are still going to be long. No. Shopee is a whole different model. So you have the options. You don't have to say, if you peep in and say, there are 6 people in line, I'll go up to Phone Shack and I'll pay my bill. Or I'll go Goodwill and I'll pay my bill, and that sort of thing. Okay, so it's really, really convenient. It's really a time-saving thing for you. And as we say, time is money. We're going to come into that part of it because I guess we're going to be speaking more about all of the services too. But that is a very essential part. That is really what we're pushing at Shopee. We're telling you that paying bills is absolutely necessary. You must pay your bills. We cannot run away from paying bills. But do you need to spend time paying bills? You have to prioritize where you need to spend your time. Right. And that is what is important. With Shopee, we're saying that you don't need to spend time on something that's not going to make money for you. Paying bills doesn't make money for you. You have to pay it, right? But you can spend time doing something that can make money for you while you're simply spending little time on the things you must do. All right, so that is what we're saying here. And I just want to also say that it's not just this. We offer our online services as well. So you can save time. You don't even have to come in the line.
We will get back to your online services.
Okay?
Because
so
that's
you
what
can
I
manage
use.
it for yourself.
Right.
I do it for myself, not just because I work there, but it is absolutely the best thing you could do for
So we
yourself.
will come back to the online service, and you'll also tell us what would the customer have to come in with to pay their bill. So now, Mr. Credit Union, I see new branding.
Oh, yes.
I'm seeing colors. I'm seeing it's not just one big family anymore. Tell us about what's happening at NCCU.
Well, change is inevitable. So if we must change, we must look at the community and we must see what the community wants. Credit Union has always been a homegrown institution. That's how we started. And it is in line with your theme because previously, persons had cash tins that they saved a little 25 cents and 10 cents, and then Christmas time or Independence, you break that open and you get your monies for. But right now, persons don't do that. You have your card, so the money's on your card. But the credit union realized that as we're growing, that we're losing touch with the people that really matter. So we moved from one big family, which is what we had, and we expanded to the community. So right now, it's your community financial partner. So what we encompass is the whole of Dominica. Every hamlet, every little nook and cranny of Dominica is included in the credit union because we want to reach everybody. So that's why the rebranding came in. So the rebranding isn't something like we're changing who we are or we're becoming something different. We're just like looking at how we were before, what we did before, and we just put a little bells and whistles, a little sprinkle, little jingle bells on it, so that when we come back and we relaunch, they're gonna say, "Wow, that this is the same credit union, but we have that wow factor now.
So that whole launch took place already?
Yeah, that has taken place.
Okay, so now instead of, because I love the one big family, instead of one big family, National Cooperative Credit Union is now
your
community financial partner.
But interestingly, the one big family is still there, because we have multiple big families now in the community. So,
right,
so that is the concept that we're looking at. And it's been working, because what we realize is that the way people do business, the way people interact with an institution changes, because as my friend says, Shopee, you no longer want to stand in the line, you want to get your service at your fingertips. So that is the movement that we're into. And we have several branches across Dominica, but we also have an interesting branch coming up, which is our virtual branch. Mm-hmm. So you'll be in the comfort of your home, people watch John Restless and those things anymore, watching your little soaps, and eating frying your little sausage at night, and making your little ice cream, and you can pay your bills, you can do your financial services. So that's the kind of a concept that we're looking at. And we have some things coming up. I don't want to spill the beans because our marketing people might be a little bit mad at me, but I'm happy. I'm excited that I'm talking about the credit union. But we have some new services coming up that's going to make it more convenient for you to do business with the credit union. Because one of the staples of the credit union is our lines. You always see those lines at the credit union. I mean, love our members. We want our members to come in. Don't get me wrong. But we want to allow members that want to do service a little bit speedier to come in, do your business, and get out. And the members, the regulars, the ones that come in, to pay their loans and to get their $10 and the $5 every day. No, you can come in, but then the other persons that want to do business quickly come in, come out, and then you can. Because
I had an incident today. I went to the Roseau. Well, you say Roseau? Well, yes, Roseau.
What is Roseau?
The branch
is
Roseau, right? And the line was long, and I'll go down to Maho. And I went to Maho, and there was.
But it's an experience. It's an experience. The long lines actually, as I said, is a staple of the credit union. When you come in there, something interesting always happens. So whenever I come to work, I always expect that something different is going to happen. So I said, because of the long lines, because there are always persons that come in with a story, and credit union is almost like a place to go to, a communal space.
Right.
Yeah. So, but we including the entire community. So that's what the rebranding is about, and we sort of like re-envisioning the services that we offer, because we've changed our rates. I mean, we have mortgages now at 5%.
We'll come back to the rates. We'll come back to the rates.
I told you, I get excited, so you have to.
We can pay.
I'm just saying that is something that should be explored. It's something that we should have here. Your customers can pay their loans at Shopee.
Oh, well, you see, that's why we have a similar
partnership. So that's something we can speak about. So
was that planned? Because I expect to plan that.
It was a plan, but it's something we can. Rosemary, right there, speak to the credit union. Let people come and pay their loan at the credit union.
Yeah, but just to add to that too, that's the same thing. We have billers onboarding all the time.
Right.
That is what it is. Is you expanding. As you said, it's not just about paying utility bills. You can have your utility bills paid, insurance. It could be loan accounts. We also have along the bank accounts, sort of accounts like that. I mean, it's broad. So we could offer, once we are able to do that business, we can integrate. We're able to offer that service and allow the customers to pay as many bills as possible.
So the question I have, somebody coming into Shopee to pay their water bill, the Duasco bill, do they need to come with a copy of the bill or the account number?
Yes, so you work with your account number. Mm-hmm. That is the best way to locate the account. All right, so the teller would input the account number and the information would come up. At that point, the person will be able to pay their bill. Okay, if the customer has their name, yes, we could do a search, but obviously we want to be very, when you're dealing with an entire country, you have persons having similar names and you want to avoid any unnecessary errors. But we have our training in place to ensure that our tellers follow certain procedures to ensure that we capture the right information. If we cannot identify you, if we see several names and it is similar, or even sometimes somebody might have an apartment, they have an upstairs and downstairs. Once we cannot recognize or we do not know exactly who we're paying, we won't go ahead with the payment. So primarily what we want you to do, or ideally, is to work with the account number. And that way it makes it quick, efficient. If the account number is not in the system will not validate the information because the information comes straight from the biller. Okay, so we present you with your balance, so you're able to pay that bill, and the balance is updated with the biller as well. It's updated on our Shopee system. And it's only what you pay in Shopee stays with Shopee. All right, so I mean, it's not like we have any other information regarding the customer's history, the customer's paying thing. There's nothing else that the teller has. It's just one line showing the customer's balance so they can pay, their address to confirm that it's them, it's John Brown. Nothing else. We store no information in our system, no information regarding your credit card or anything like that. Okay, so you have that security and confidence in a system that has worked since 2002.
Okay, so I use Shopee as well. I do not go into the office because time is money for me. So I do not have time to go into the office. So I was one of the early birds that log on. So you can also let the viewers know that they can sign on to APP. I know it by heart.
Sure, we actually made it even easier for the customers to tell them app.shopee.
Right.
If you go to our website, our website is updated now. So all the islands in the Caribbean, we use the same brand, Shopee. Dominica was the first country since they launched this new logo to launch the new logo in April. But as of last week, all the islands are using the same logo. So when you go onto the site www.shopeebills.com, let me just say again, it's www.shopeebills.com. You go in, you will, right there, you'll be able to do everything. Register, you will see customer, you will see our payment locations, you will see the bills you can pay, everything.
So we will choose Dominica.
You just choose Dominica,
and
you go on and it will guide you as to what to do. So eventually it will take you onto the APP site that you're accustomed using. So it makes it very easy. So just think of the website, www.shopeebills.com, and right there you go and you have everything done.
So I can speak about my experience. When I signed on, I inserted a credit card because I use my credit card instead of a debit card. And I actually wanted it to automatically, every month on the 29th, take the payment from my credit card. And this has been working flawless. So I would really like to encourage people. So water bill is one bill I do not have to worry about.
I get my notifications.
It is paid automatically. So I can put in a plug. I have used it. It's working for me. So I would really like to encourage. Another good thing I want you to speak to our viewers overseas, because a lot of them, they have grandparents and aunts, and that's an opportunity for them to pay that bill for them. So we'll come back to you. Now, Mr. Credit Union, I heard you talk about 5% on mortgages. I remember taking a loan like 19 years ago, a mortgage, and I paid like 10%. So that is a real big job. Tell us about it.
Well, again, as I said, we looked at the community, what the people are asking for, and interest rates are something things that have been discussed widely around Dominica, around the world. So a lot of people want lower interest rates because, of course, at the end of the month, you want to be able to pay your bills, pay your mortgage. But I consider mortgage to be a separate bill from your regular bills because it's a lifetime investment. So you pay your bills, you pay your mortgage, but you want something in your pocket. So, you buy a little KFC, a little something. I don't want to plug KFC, but you buy a little nice something. A little nice something at the end of the month. And consequently, it's interesting because you can't pay bills if you don't have any money.
Right.
So it in line with what you're saying again, you need to build capacity. You need to invest in yourself. You need to get savings. So my grandmother used to say something interesting, and it wasn't exactly what they say it was, but you say pity a pity, you make energy and portion. So something to that effect. Little by little, you make energy and portion. So you save a little $10, and we have several accounts at the credit union that can help you do that. Especially our member retirement account is a very good account. It offers the highest interest rate across Dominica, probably across the region. So come and open an MRA account. You need to bring in your birth certificate and an identification, and you go to a member services counter, and that can be done. I'm just plugging in the services. We have special savings accounts for whatever purpose that you want. Your child's graduation, you want to buy tires for your car. You decide you want to go to a dinner, you want to invest in a dress or something. I know people advertising that famous site. I can't call it the name. No, I'm not going to call it. So people, whatever the occasion, you have that special account that you can see. We have deposit accounts, we have checking account, we have security savings account. We have a lot of accounts that help you to manage your life. So little by little, you can plug something into. And saving doesn't have to be something that you stress about. $5, $10, any little bit that you put on the side is going to add up and you will be surprised that whenever you need money, that I did not have that account there. So it's important.
That is one of the things I like about the credit union, because when you take a loan at the credit union, there's a compulsory
savings, yes.
And I'm telling you, if it wasn't for that compulsory saving, a lot of people would not even have some money saved. And that's a very good idea.
We've made it even easier for you, because right now you can draw down on your compulsory savings. If you have an emergency, you need funds for you to pay your bills or whatever it is, you can come and you can draw down on the because it's your money, we just hold it for you, and it's securing your loans, but we still want you to have access to it. So the 5% mortgage, as I said, this is a very... Or 5% is a 5% that has no added little things on the side.
The fine prints.
No hidden fees, no fine prints. We promise you 5%, you get 5% on a reducing balance for the life of the loan. Oh, wow. Other places I won't mention the names again because I'm plugging anybody. They'll tell you 4.5 and they'll tell you all those things. But then when something comes up, you go to them and say, but okay, I need to add to this and I need to add to that. They tell you, but no, you had 4.5. If we have to give it to you now, we have to change your rate.
Right.
So a 5% is a nice 5% that you can count on. It's a, was that a short pay? It's a sure. It's a sure 5%.
And so if I come back for 20 grand more,
your 5%, your 5% locked in, yes. You're not going to change your rate.
So that's good information to have.
Oh, yes.
So Rosema, I want you to tell our viewers from overseas, encourage them to sign up to the app or to assist their parents or grandparents.
Just to mention too that our mobile app is coming.
Okay, I'm looking forward to that.
So you could pay directly from our website, but you will have the ability to pay using the mobile app. But yes, for those overseas, I have had some grannies and some grandpas call. Let me tell you something. These people bless me, and I take in the blessings. I'm used to just receive the blessings. I'm just so thrilled and happy to help them. Honestly, just to help them. I had this man. Just to give you an example.
Right.
Where was he from? My God, he was from somewhere in the UK, some place. And let me tell you, he's concerned, an elderly man who needed to pay his Dowasco bill, and his concern was his dogs that did not get a bath in how many days, This dog, because he didn't have water.
Right.
And that was his need, and he was so concerned about it. But I walked him through the process, and he realized how easy it was. And he was an elderly person, but he was not intimidated to use it when I just explained to him how he was able to sign on. Go on to the website, wherever you are in the world, whatever bank card you want to use, you can use it. So ShopPay does not limit you to your bank account in Dominica. It does not limit you to your Republic bank account. I'm not afraid to call the bank name. There are only two, and we have credit unions. It doesn't limit you to your national bank account. It doesn't limit you to your Republic bank account, or if you're using the credit union. You could use any bank account. So you can use the funds that you're comfortable using anywhere. Okay, so you're in the US and you want to use your US bank account. Right. You go on, you add the bill, you select from the drop down all the billers that are there. If you want to add your Dowasco, if you want to add your surgical health, surgical, whatever it is, you add those, you add the account number, it will validate for you so you know the account is correct. And then once you've added it, it goes into your little box and you tick off whatever payments you want to make. You go to the next page and you select the card, but you will have input the information of the bank card, the name and everything, validate. And before you check out, obviously, it will ask you for your CVV code, to ensure that it's authentic, the user and everything. You put it through and it says successful payments, and that's it. So it's a very simple process. It takes you step by step. It says step 1, step 2, step 3. So for the layman on the street, can follow.
Right.
You can follow. If there's any issue, it will pop up giving you an error message that this is what happened, and if you need any assistance, you can call. The number is right there. We will guide you as to what you need to do. And sometimes, if, for instance, you may have created an account and use the same email address, ShopPay recognizes, too, the system recognizes that this email address is in use. So even if you try to use another name under the same email address, you will get an error message. And at that point, if they contact the office, I'd probably notice that this is what happened so that we don't have any duplicates or stuff like that. So there are lots of things in place so that the customer has the confidence in a system that works. It's not just a to-flam thing, we come overnight.
Right.
No. We test the system is tested. If there's any problem, they ensure that our team ensures that we work on it right away. So it's very easy to sign up, no matter where you are. As I said, Anywhere in the world, you can use SurePay.
Thank you. So
Okay.
as we speak about wealth creation, the MRE, I'm an advocate. I love the MRE. It's my favorite account. Tell us about the MRE. What does MRE stand for?
MRA stands for Member Retirement Account. And of course, in your later years, that's usually when you call for more cash because you have to buy medication. Sometimes you may still have debts that you carry with you into your retirement age. So you need an account that it's like a cushion. Mm-hmm. And of course, once you retire, all those funds become available to you. You could use that as security for
60.
At 60 years, yeah. And then we also went ahead. And because the person that were retiring later, because you have to work harder now and you have to work longer. So we also have our MRA Gold that carries you to age 70.
So that's from 60
to 70. Yeah,
so
we have the
when I
MRA
get
Gold.
my funds at 60,
Yes.
I can up to leave it or start fresh?
You can, well, the MRA Gold is a fresh account. So you start fresh.
Wow.
Yeah,
So if the $1,000 is the max as well?
yes, $1,000 is the max
Okay.
for that one as well.
Okay.
So it's a good account for. Well,
Yes,
actually,
yes.
we lowered it. We even made the threshold a little bit lower because I know at that age resources are sort of tight. So you want to ensure that you have enough money for your little bills, you have enough money for your medication, and you have enough money to save. Because saving is a lifelong thing. It's not something that you do up to a point in your life and you decide you're not going to do it anymore.
Right.
It's always wise to have something on the side. You save for rainy days because we saw what happened the last time. You had a dry season since whatever month, I can't remember. And when the rains fell, the rains really fell.
Right.
And it caused flooding. So, I mean, that is how expenses are, and that is how crises happen in life. That when they come all at once. So you need to have something on the side that you will be able to manage.
So when
those
you
crises.
said you lowered it, like...
No, well, in terms of the amount that you need to save, because for the MRA, the maximum
is 1,000.
is 1,000, but for this one it's $500. We want to make it a little bit easier for you. Yeah. So,
but it's really starting from scratch again. $500 max.
Well, remember you would already had your MRA account nicely nestled on the side, you know.
So the interest is 4%.
4%, yes.
Okay, it's still high.
It used to be very high, but then I mean, as time changes,
yes.
interest rates have gone now. So that's one of the key accounts that I think everybody should have. Open. And I'm also encouraging our members to not just save, but also build capacity in terms of owning assets. Because a lot of the young people, they invest their money into things that are fleeting. No, you get it today and tomorrow is gone. You buy a car, you buy a motorbike. No, you travel, you buy your costume, you go to a fete, and then you're at the bar and you're the big man or the big woman and you're making drinks. All those things are fleeting. Invest in something, but buy a piece of land, start a little business. Because our young people, their minds are a lot different than, well, my mind is old now. I'm close to retirement age because I've been a credit unionist for 40-something years. I opened my account in 1971. I didn't open it, but my mother opened it in 1978. And I've been a credit union, working with the credit unions for 20-something years, 26, 27 years. So, I mean, that's all my life.
Right.
So, I mean, but invest in something. Our minds, as I said, the ideas that we have, they have changed. The young people have a lot of different ideas. I mean, SurePay, I'm sure, was something that was envisioned by someone that wanted to make it easier for everybody.
Right.
So the young people have those ideas. So start a small business, something that you're doing regularly that you figure you can earn money from. You can earn money from. We have a business development unit at the credit union. It's like NDFD. I'm going to plug them in. that will help you to manage your small businesses and your business ideas. So don't just sit idly by and figure I'm going to make money and I'm going to blow it overnight. Invest in something for yourself and for your future. Save, get assets, start a small business.
Right.
No, do something substantial for yourself.
Because at the end of the day, you did say I'm NDFD, but one thing I want the viewers to know, although our partners is 26 of us, and in some areas we compete with each other.
Yes.
Well, not the ECCB obviously, but we compete.
Yeah.
But when it comes to Financial Information Month, we partner together.
And
Because
it's
at the
important.
end of the day, what we want is a financially literate community. So if we can get as many people as possible literate, able to pay their bills, able to manage their money well, then credit union is going to benefit because they're going to service their loans. And SurePay is going to benefit because they're going to come in and pay their bills.
About managing, because that is one of the things for us. manage. It's actually a bill management tool.
Right.
Because think of it, even for you wanting to get a loan at the bank or the credit union, it would be so good. See how quickly you could just go into Shopee and print a history of all the bills you pay without having to run all around to the different locations to try to get a history of how much you spend on XYZ. But if you keep all your bills in one place, you could
Makes it
simply
easier.
download or just check a 6-month history and carry that to the bank. And here it is. I know we spoke about the ECPCGC. And right here, you're able to carry that information to the bank, to the credit union, and say, hey, this is what my expense is, so that it could go and expedite the process of getting.
And it will come in handy too when they do the credit bureau. That people can go in. So, of course, I'm going to give you both an opportunity to wrap up or give us a financial tip. Whatever it is you want to do, feel free, Rosma. You want to go with a tip or you want to?
Sure. Well, I have a health tip as well, but just to say too that one of the keys to wealth creation is to pay your bills on time. Very simple. One of the keys to wealth creation is to pay your bills on time, and to manage your bills in one place or using one app is a very good thing, instead of having to jump to too many places to do something that is very, very important. And just to go back in that same tip, you want to spend or prioritize your time on spending on the things that's going to make money for you. Okay, so if there is any opportunity to use an app or to use something where you could pay, or like in the case of the bill payment, you know that you must pay your bill. You absolutely must pay your bill, but you don't have to spend so much time paying your bill. Okay, so you want to prioritize how you spend your time. That's very important. And also, just want to give a health tip. I just want to reiterate, or just to spend time taking care of your health. I really thought I would just push this in, not just your physical and your mental health. I know today is mental health day, and I just wanted to bring that across to the viewers. Spend time taking care of your health, not just your physical, but your mental health. Because without that, you will not be able to be that wholesome person that can be productive to be truly financially resilient. Okay, so that is a tip I would really like to leave with, all of our viewers.
Thank you.
Okay, well, I'll just end by saying that if you're not a credit union member, NCCU members yet, become an NCCU member. If you already have an account, please update your account, because we need to, things change, we need to ensure that your information is up to date. And, well, my financial tip, a lot of people think that comfort is having a lot of riches and a big house, a big car. But for me, comfort is on the Sunday when you're still in the goods, that you have a $10 or you have money somewhere that you can actually go to purchase one. So that is what comfort is. So make yourself comfortable. Have something on the side so that in case something happens, your tire gets busted, you can fix it on Monday. Or your cylinder goes, you can or your
child. I would say have the other cylinder right there.
Well, that too. But I mean, it's always important to have something on this side. So that's my tip for you. Make sure that you make yourself comfortable by ensuring that your finances are okay, that you have something saved up on the side for those rainy days. And I know that rainy days are going to come very soon.
They will come. So thank you very much. So we had Shopee, Rosma Burton, and Albert AAP, NCCU.
That's right, yes.
Thank you very much. We are going to our next segment. So you can exit your seats as we get our two other persons to come in.
And thank you for having us.
Oh, no problem. We are not having any break. Yeah. In the meantime, we'll call on Cancer Society to come up, the representative, because every year, Financial Information Month partners, we make a financial donation to the Cancer Society. So we will take the opportunity to Bernadette, Cancer representing Cancer Society. It's a small donation, but remember, we're something little by little, fill up the basket. So that's our contribution to Cancer Society on behalf of, not ECCB, on behalf of Financial Information Month partners. Would you like to send it? On this spot. Go ahead. Tell all of you.
Okay. On behalf of the board of directors and the members of the Development National Society, we say thank you. It will go a long way in helping us make our mandate, which is to assist people get treatment. Thank you very much.
You're welcome, Bernice. That's our cancer society. About 2 other persons come forward. So we are not taking any great MO and MO viewers. So we are going to have Central Cooperative Credit Union and the representatives of COPEC. And they will be interviewed by Luana Laura. So we are not working.
All right, good evening, everyone, and thank you for staying with us as we continue our Financial Information Month chit chat as we celebrate with our FIM partners this month and the rest of the ECCU Financial Information Month. My name is Luana Laura, and I'm the founder of Finance Focus, a financial education company who is here to support as an FIM partner as we share Financial Information Month with you. And I am joined this evening by 2 colleagues, 2 fellow FIM partners, Mrs. Lauren Henderson-Reed from Central Cooperative Credit Union and Mrs. Dupree, who will be representing COPEP Insurance. I'll give you a little time to share a little bit about your institution before we get into this discussion.
Okay. As Luana said, good evening, Luana. Good evening, Mrs. Dupree. Always a pleasure. My name is Lauren Henderson-Reed, and I'm the marketing specialist of Central Cooperative Credit Union Limited. Central Cooperative Credit Union Limited has 2 branch locations, one at Portsmouth and one in Goodwill, but we do serve the entire country because we have members all over the island. The branches, before it was St. Alphonsus and Portsmouth, and 16 years ago, the 2 became one. They got married. And Central was born. And we are your financial institution of choice. It is our pleasure to serve our members and prospective members, to do our community or CSR. We focus on health, on sports. We focus on education of our members. We wanna, if you don't stop me, I won't stop. And Central Cooperative Credit Union is your financial institution where you would like to do business.
Thank you. Mrs. Dupree, tell us a little bit about COPEP.
Let me introduce myself. My name is Hyacinth Durand Dupree. I'm the Business Development Officer at COPEP Insurance. To introduce COPEP Insurance is a groundbreaking initiative owned collectively by credit unions from Dominica and Grenada, not just credit unions, but credit union leagues from Dominica and Grenada. We have footprints in both islands, but are actively looking to establish footprints in the wider OECS territory. We provide insurance solutions to credit unions, and these, can I continue? Yeah. And these products include loan protection, life savings, family bereavement insurance, and flexible hurricane protection insurance currently.
Thank you. This Financial Information Month, we're celebrating under the theme, Wealth Creation for Financial Resilience. And our topic this evening is on investing little by little. And we know both your institutions facilitate investing one way or the other in Dominica. Mrs. Reed, can you tell us how Central Cooperative Credit Union is positioned to help our viewers to invest little by little?
Okay, Luana. Let me first speak about, we have something with Invest in the name. It's called Invest My CCCUL. It's a member's opportunity to own shares at Central. The more shares you own is the more dividend you get back. So, you invest, you get, invest, you get. We've made it easier for members to own shares. As you know, one share is $50. Some people may find it a little difficult to come around $50 every month or $100 every month. And so we have set up a plan where members can, every month, a little bit, some $2, $3, $5, $6 from your account is transferred into an invest account, a shares account. And at the end of the year, it's accumulated into shares. And you get dividends on those shares. So this is how you help to build owning your credit union, and also you build generational wealth, because here you go, investing in shares that you can pass down to your children and your children's children. The shares don't die, they belong to you, and so they can be passed on for years to come.
I'm happy you said that, because when it comes to share ownership, our credit unions are ours. And who are the people to continue its growth through generations? And for some people who may be challenged in contributing, CCCU has provided an easy way to buy shares in your credit union. And for those who are even more able, for example, myself, what I've done is do an automatic deduction. So every month, $50 comes out and goes towards my share capital. Because, I can spend worse things with $50. So it's an easy way to just automate your deduction and buy a share every month. At the end of the year, you have 12 shares, like that.
Right.
Great idea.
Mrs. Ducree, COPEP plays an integral part in our credit union system. And many of us, we have loans, and we don't know what's happening behind the scenes. You mentioned that the different insurance products that you provide to the credit unions. Can you tell our viewers how it is that COPEP can provide insurance to the credit unions that assist us in building them?
But before I even go there, I just want to add to what Lauren was saying. We provide the life savings insurance. That's really an incentive to members to save. Because at the end of the day, when a member passes away, the beneficiary has an opportunity to get to a maximum, in some instances, to 100% based on the maximum coverage that the credit union would have put in place of the life savings they would have had in the credit union upon death. So an example of that would be Lauren's $5 would have multiplied to, let's say, $1,200, maybe $5,000. Let us just say that your maximum coverage at your credit union would have been $20,000. Let's just say the member had $20,000, and your maximum coverage is $20,000. And the person would have perhaps died, I'm going to use a generic age of 40 years. That member has an opportunity, the member's beneficiary would have had an opportunity to get an additional $20,000. That is an incentive provided by the credit union system that is not provided by any other financial institution in the OECS. That is a story I believe the credit unions need to tell. It is a privilege of membership. One, that with a life savings account at the credit union, you will get much more than the savings balance that you have in the credit union. Your beneficiary will receive more than the savings balance you have in the credit union upon death. Loans. Loan protection, that solution provides coverage up to a maximum coverage amount, and that would have been agreed to with your credit union. So let's give an example. Your loan could have been $300,000. I'm just giving an example. $300,000. Your credit union may have had a maximum coverage of, let's say, $100,000. I'm giving an example. Upon death, the balance of your loan may have been $100,000. A claim from your credit union would have wiped off. You would have died, leaving no burden to your beneficiaries. And that is just an example, best case scenario. Okay, so there are many privileges of credit union membership that we do not talk about, that we need to be talking about very loudly in our marketing to encourage individuals to continue to save. The credit union was built on the principle of thrift and people helping people, these little $5 every day. There is a benefit to putting that $5 every day in your in the credit union system.
So for those who would like some additional information and to understand the importance of COPEF in this system, how does it differ from NCCU and CCCU? Because some may believe that because I can buy a share in CCCU, I can also do that in COPEF. Can you explain to them why that is not the case?
Within the financial ecosystem or within the credit union ecosystem, COPEF is viewed as the insurer. We work behind the scenes in the background. We do not interface with individual members. We interface with the institution. So while we provide loan protection solutions to credit unions, we interface with the institution as an entity, covering the loan portfolio or covering the life savings portfolio. So you would not see us interfacing with Luana or with Mrs. Reed about her particular loan or her savings account. We would interface with the institution on that group policy that members benefit from. We have other products like the family bereavement insurance where we interface one-on-one, where we cover the burial expenses of credit union members. All these are privileges, and the best part about this product is the premium. The premium is so very low that you can cover from 1 up to 6 members of your family for a minimum premium of coming from $15 a month up to $75 a month. And you receive benefits per member of your family passing from $3,500 to $15,000 per individual. So let's just take a scenario of a $75 premium covering 6 members. We are making you a promise, a $90,000 promise for a premium of $75. Now, isn't that unbelievable?
Talk about planning for tomorrow.
Talking about planning for tomorrow. That's what it's all about.
Nice. So I'm happy to hear that. Guys, this is a great opportunity for you to plan for tomorrow. We cannot plan for death, but we can mitigate our risk in the event of death. Right. Mrs. Reed, I'm coming to you.
Let me just add, one of the things we do promote when we do our loans is the coverage. I speak about the loan protection, and at Central we're up to $150,000. And this is one of the things we push, especially for members who don't have life insurance otherwise. We let you know, look, for the lifetime of your loan, this can happen to you. We need you to know that yes, you're taking a loan, but we got you covered. And this is one of our selling points. You don't get this anywhere else.
Yes.
This is one of the selling points that can help you to, feel okay. Anything happens, I'm okay. My family is okay. My children don't have to worry. I'm good. And that's one of the things we sell it for.
Yes. And just to add to that too, what she forgot to tell you is that the credit union pays the premium on behalf of members as a gift. Did you hear that?
It's free.
Free loan protection and life savings insurance from your credit union. There's no better place to go to.
And it doesn't matter if it's CCCU or NCCU.
Credit unions, and I'm saying and the NCCU, the Centrals, the West Coast, your credit union has your back, providing you with that insurance protection backed up by this gift that they're providing to you. And I can't wait to talk about the flexible hurricane protection.
Awesome. We seem to have a question from the audience.
So if someone has a loan and the credit union
compulsory to have life insurance?
Yes, up in excess,
In excess
of the
one-
maximum coverage.
So there's a certain part that we've got you covered.
Yes.
And if you have a little excess, then
Yes.
we help
Yes.
you sort that out. We don't leave you hanging. We help you sort that part out.
Amen.
Mrs. Reed, you mentioned the Invest by CCCL as one of the products that helps to build wealth. What other facilities at your institutions that can assist us, individuals and small business owners, all business owners, to invest and increase their wealth?
Okay. So we have different loans, and one of the things that we like about our loans at Central is that we give you financial advice. So we don't just let you come in and take a loan because you think you want a loan and you saw a promotion and Lorraine speaks very well and she can convince you to come in. No, we help you, and it's a case-by-case basis. We help you sort yourself out. So we give you financial advice. We lean you towards the best loan for yourself, and we give you compulsory savings. Now, we're a little stringent with the compulsory savings because we're trying to help you to save. And so we offer you there different accounts. We will help you. So you have your compulsory savings, which is your regular account. And so we encourage you to open a special account for the money, for the football game, for the children, the different things that you need, the rice and wine and all of that. That's a special savings account. You have that. But your regular savings, which protects your loans, even if you're in excess of what protects the loan, we work with you to not remove that money. If you have an emergency, something is happening, okay, but no. And that's how you build. You build. There's something. So you invest in your shares, you save, and you also save for your children. You save for your children. The smallest amount adds up every month. At the end of the year, when I update my children's account, I'm like, oh, okay. Because the small amount I put every month, it looks so small.
Little by little.
But when you go to update the account, then you say, oh, okay.
It's yeah.
Yes. The children, little by little, their savings are, and that's you're helping your children to also learn. Because when they see that you're saving and you take them to the bank with you, they save the $20, they put the piggy bank. I'm a promoter of the piggy bank. So every year I get Central. Once I'm ordering paraphernalia, piggy banks are included. And everything I do, schools, piggy banks. I'll give you a piggy bank. Because it's very important that you understand the concept of the piggy bank is saving small amounts. Mm-hmm. Nobody puts $50, well, my mother puts $50 in the piggy bank. I don't know. But nobody else I've seen put $50 in a piggy bank. It's little by little. It's the 30 cents you see on the counter, the dollar. And at the end of the year, the children are they're very excited about what they've done. Right. And that's savings. So the small amounts, that's what you invest. You invest in your kids. You cannot save, this month you can't save $500 for the children. That's okay. $100 goes a long way. I'm telling you, when you, at the end of the year, you just, I'm telling you.
I'm happy you said that because
1,200.
Before, when I started, I got my student loan, just enough to get the student loan, and without no savings. That compulsory savings is what put me on the path to have a savings. And you may not be expecting it, but once you pay off that loan and they release that compulsory savings, you're the happiest kid on the block.
That is true. And
Hallelujah.
My parents did that. Thank you, Mom and Dad. I always thank my parents. There's no one can say, I always thank my parents because they saved little by little. That when I was ready to go to university, I had a good chunk of money available to me if anything went wrong. So, and that's, I'm sure, if I go to the history, there was no time my father stayed by $500. There was no time my mom stayed $500. It was always little by little. Because my dad was a farmer. So every time he got his pay packet, he would put something aside for my sister and I. And this is what I've learned. Generational wealth doesn't have to be always savings wealth, but the things to teach your children, the things I've learned from my parents, and I have now transitioning to my children. It's generational wealth. That is wealth. And so you invest in your children. You save small amounts. Your compulsory savings, you try your best to keep it. You have a special savings that you can tap into, and these are ways that you yourself can go a long way.
Thanks for sharing that.
Yes.
Mrs. Dupree, we're in the hurricane season. And one of the facilities that COPEP offers is a particular type of insurance that can help us manage our risk. The term may seem technical, but can you simplify it for our viewers, especially the farmers, the fishermen, how that particular type of insurance can assist them?
I am happy to do so. The term flexible hurricane protection is a very simple name. We could just call it FHP. Just remember FHP. It's a parametric insurance that protects against, it is not an asset-based insurance. You're probably used to indemnity insurance where you protect against a house, a car, it's not indemnity insurance. It's a wind-based insurance providing protection against the probability of a storm hitting a particular parameter. So, for instance, a tropical storm or hurricane category 1 through category 5 should hit Dominica, I'm just giving Dominica as an example, within a 25-kilometer radius of the shoreline of Dominica. Your policy would have been triggered. You'd get an automatic payout. Automatic payout without the interaction of an assessor, an adjuster, or making a claim or filing a claim. That is how easy and convenient that particular product is. I'm trying to break it down as much as possible so the farmer who's listening to me do not get any fancy terms in explaining this particular facility. This conversation is for the farmer who's listening, for the vendor who's by the road, the small business individuals, is for the homeowner, the housekeeper. It is for small businesses as well. You have situations where individuals feel like they cannot access the regular insurance products. This is an opportunity for you to take advantage of that solution and protect yourself against the eventuality of a tropical storm up to category 5 hurricane hitting. You can utilize those funds however you wish. There are no preconditions as to how you should utilize those funds. Once you receive that payout in your account, you can fix your roof, you can fix and put money towards your small business, you can restock your shelf, and you do not need to have any damages at all. Can you imagine? Once that storm hits that trigger, you receive that automatic payout. No, this is not a scheme. It is backed up by global parametrics, and you can Google them, www.globalparametrics.com. You can Google it. It is also backed up by a fund by the German and UK government that you can also find on the Global Parametric website. This particular product was developed by Creed, and COPEF Insurance has the distribution rights for the Dominica and Grenadian markets. For the last hurricane season, we had quite a bit of interest in the product. Coverage runs from June 1st, which is when the hurricane season opens, to May 31st the following year. So anything that should happen, any freak storms or anything should happen during that period of time, you have that coverage. And before you ask, COPEF Insurance is a regulated entity, both in the Dominican market and in the Grenadian market. Wherever we have footprints, our company is regulated, and it is the fiduciary responsibility of the regulator to ensure that the company is well positioned, is capitalized, and has enough capital for its operations in both jurisdictions.
Excellent. That's great to hear. So guys, whether you're a fisherman or a farmer or someone who deals with livestock, this is an opportunity for you to get coverage. Now, before we wrap up, I just want to hear from you both how, within your institutions, what advice you would have to our listeners on how they can continue to invest little by little and build wealth, generational wealth. At CCCU, I see now there's a recent promotion going on for the independent season. While it's associated with debt, I believe there's an opportunity there for business owners to invest this season. Mrs. Reed, what advice would you give individuals who are considering that facility this season?
Okay, first, I always say to the members and the prospective members, yes, prospective members, I'm speaking to you, we're offering you $10,000 for the independent season. If you do not need $10,000, do not take it. If you need, let's say you're having a bar, one of the fringe events at a bar or one of the fringe events, I don't know anything about bars, I'm just going to throw something out there. And let's say you need $1,000 to set up the bar, $1,000 to stock your bar, you only need $2,000, you apply for $2,000. Because you can afford to get $10,000, don't take $10,000. You have to pay back $10,000. It's not a gift. So you need $2,000 to invest, you take $2,000 to invest. You need $5,000, you take it. So I always encourage, when I promote the loans, everybody's excited, everybody's happy, but I always encourage my members and prospective members to take what you need. That's it. Nothing more, nothing less. So that you will have, you want to have some leeway. Let's say another activity comes up, you want to invest again, you have not paid back enough to get more. You have that space that you have now to invest. But if you take the $10,000, I don't know what you did with it, and then now you have nothing left, what would you do? So you want to be financially stable, you want to have financial sense, and you want to do things well. So you need that amount you take on. And then you have the compulsory savings, which I like to talk about. So you have that. You want me to give my tip at the same time?
Yes, go ahead and
so
share
my
your
financial
tip,
my wealth, health, my little tip is voluntary compulsory savings. Listen, I don't have to do anything. Compulsory savings. So when the pay period comes and whatever money I see in my account, that's mine. Because everybody, all loans are paid, all savings are done, everything. I don't have to spend nothing. So I see the money in my account, good, because everything is taken care of. So you can set it up. It's voluntary, set it up with your place of work. If your place of work does not do it, set it up with your credit. Transfer this to this account, transfer this to that account, transfer this to that, pay this loan, and when you see, okay, what I have, everything else is done. So that's a way that you can train yourself to save and to ensure that your bills are done. Because when you have that money and you have to do it yourself, let's be real. Sometimes you might skip that one.
Yeah,
I won't save this month, I won't save it. But when it's done for you, you don't have to do nothing. That's the best. And I always encourage my friends. I have all my friends.
I do the same thing.
My friends are so annoyed with me. I have all of them. I'm like, oh, it's suddenly voluntary. Just do that. Do that for your daughter. Do that for you. Yes, because I want all my friends to have a little something aside. Should in case something happens, that we don't have to do a GoFundMe on Facebook.
What about you, Mrs. Dupree? What is your wealth tip for us this year?
Wealth tip would be about consistency. If I leave nothing else, it would be about consistency. Consistency in one, creating wealth does not have to be a lump sum, a big amount that you deposit in an account. You deposit a little bit at a time. Little by little it grows. You save $100 a month, that's $1,200 at the end of the year plus interest. You look at it over 5 years, that's already $6,000 plus interest, and you think about your financial planning and you say, okay, it may be you started working at 20, you're going to work for 25 years, or 30 years. How are you going to retire? Or if you're looking at you have another 12 years or 15 years in the service or working for an institution, how are you going to retire? How much do you have to put aside in order for you to retire well? So if you do and you can, and you put aside if it's a 500 a month, 1,000 a month, you can always project that figure and see how you're going to retire. Because time is not going to wait on you. It's coming. 65, it's coming, and coming very quickly. And if you're working for the government service, they'll tell you goodbye. How are you going to retire? You need to ask yourself that question. If you're lucky in the private service, in the private sector, they may keep you for another 2 or 3 years. But you need to ask yourself, today you're bright and young and you got that first paycheck and you're happy. But according to my mother, do not be young and frivol. Put some money aside. Open an MRA. Make sure that you put in some funds aside for retirement. So consistency in your savings. Make sure that you have that discipline not to touch that money if you don't have to. Because a need is going to come up. Whether it's health, whether it's wealth, it's going to come up.
Thank you very much. Thank you for sharing your views with us. And we end on a really nice note, thinking about retirement. Yes. Our next segment will be on planning for tomorrow. And we are joined by 2 other additional FIM partners, NDFD and Sagicor. So thank you, Mrs. Reed. Thank you, Mrs. Ducray.
Wonderful. Thank you so much.
Steady. You fine?
Steady, no?
You fine? That's it. Down, go for.
On that side. Raise it from raise it from sit on it and then raise it. No, I'm just saying. You can just sit on it and adjust.
It's like a swivel chair.
Right.
I remember your name.
Thank you for staying with us. We are in our final segment of our chit-chat discussion. Oh, there's one more. We have a bonus for you guys this evening. We have one more following this. We are here this evening with 2 other financial information partners, Mr. Brenton Hiller, representing Surgical Life, and Mr. Cletus Joseph, representing the National Development Foundation of Dominica. Thank you guys for watching so far. Thank you for supporting us. Thank you, interviewees, panelists, discuss partners, as we discuss our topic this evening, planning for tomorrow. You've been hearing a lot of discussions surrounding preparing for tomorrow, retirement planning, saving for emergencies. All these encompass planning for tomorrow. And this evening, I'm going to start with Mr. Brenton Hiller. Tell us a little bit about Surgical Life and the role that it plays within our financial system when it comes to building wealth resilience.
Good night, everyone. To those in the audience and those listening via Imo News. So just to introduce myself, I'm Brenton Hillier, agency manager at Sagicor, and I've been in the business for about 14 years with experience in sales and administration. So I usually tell persons that I have a very big back and throw any question at me. Now, for Sagicor as a company, a lot may not know that we have been in the business for 182 years and counting. So we are a financial institution that has a lot of history behind of it. And one of the things that we can boast about is that Sagicor is a Caribbean company at heart. A lot of times we see financial institutions finding an opportunity in Dominica and coming in to set up a branch. But Sagicor started from the Caribbean and branched outside of the Caribbean. So I'm very proud to work with a company like this. Essentially, I would say you could consider us to be the shock absorbers of any financial part of the country, of a family, of a business, because we essentially have plans that are put in place for the what-ifs. And there are several what-ifs in life. Our competitors in life are death, sickness, old age, loss of income. So we battle those what-ifs on behalf of the people who are our clients. And a lot of times we often think that insurance is just about death. But when you really have to sit down and have a deep discussion with one of us, you'll find out that insurance is not just about death, but insurance can lead to helping you to retire comfortably. I heard about retirement planning a while ago. There's circumstances where, due to unforeseen circumstances, illnesses, that we cannot work anymore. There are plans that can replace your income. We also have plans that can help you to send your child to school at the university level. So we are able to assist in several different areas. It's not just about death.
Thank you for that. And when you see Brenton, you know exactly what he's going to speak about, and we all know it's insurance. Mr. Joseph, can you tell us how NDFD contributes to so many small business owners and individuals when it comes to building wealth? Tell us a little bit about NDFD.
All right. Good night, everybody. Thanks, Luana. Thanks, Mr. Henry, right? Yeah. Hilaire, right, yeah. Well, NDFD has been on the scene for 40 years plus 3. From 1981 to 2023, right? National Development Foundation, we started in 1981, and one of the major objectives was to provide an access to persons who did not have an access to other finance institutions to be able to, one, start a business that they intended to do, and also to access other financial services which they would not normally qualify for under traditional finance institutions, right? But we have tried to refine it and to really define what it is that we do, and we're guided by our mission, which is to contribute to poverty reduction, human resource development, through the provision of credit, business advisory services, and training, primarily to the micro and small business sectors. Now, if we were to break this down, you can see that it provides a complete suite of services to persons who intend to use our services at NDFD. So, talking about poverty reduction, if you are able to generate income, revenue, through some form of business that you undertake, then it means that we are contributing to you, reducing your level of poverty if you manage the resources that you're given in a prudent manner and in a manner that you intended to utilize them. And I say in the manner that you intended to utilize them deliberately, because when we talk finance, finance must be for a specific purpose. It does not make sense to secure financing for one thing and you use it for another, particularly if you do that without informing your finance institution of choice, okay? So that is a key to that. Now, in terms of human resource development, we do provide training as one of the key concepts, the key pillars of what it is that we do for our clients. So we can train you to start and operate a business. You may be the expert at what you do in terms of developing or creating the product or the service, but the aspects of managing a business has certain critical pillars or aspects of it that really require some specific skill sets. And if these are absent, not saying you won't succeed, but you may struggle a little more, or you may find yourself at times not knowing what are the next steps to take, and that can be crippling and devastating to you. And in the event of business advisory services and training, we try to link them, but they each have their part. So we can train you in the business administration, and then we can help you to develop the critical aspects of your business by providing specific services that you may not have the skills for. Now, the skills for a business, you could have it in one of two ways, let's say. One is that you could have it and you can utilize it through your own education, experience, knowledge, whatever. However, that may not be the case, and usually that is not the case. So you can, quote unquote, buy it. And buying it means that you hire somebody to do it for you and you pay them. All right? Right. Good. So when this is the case, or let me say, because you have to purchase it, it comes at a cost. And sometimes the small businesses, the micro businesses, do not have or cannot generate the level of revenue that is required to buy that skill set because it's specific and therefore it is costly. And here comes the NDFD. We have a unit, a business development unit that can help you, not free, but at a very reduced cost to help you to rise up to that other level of development in your business. And this is critical. And as I always tell our clients, if finance were the only issue, we would not have issues. Because normally there is not so much of a shortage of finance. But within your establishment, there will be and there are other shortages of critical skill sets that you need to manage and operate that business. And that is where, again, NDFB comes in. So we can provide the finance to start or to expand or to develop your products. We can provide the training required to help you use certain techniques or skills or figure out issues and to solve them. And we can help you to develop tools within your business to be able to do the operations, to maintain your financial records, to use the financial records that you keep. And let me just end on this segment on that. Keeping records is not just for the finance institution. Keeping your financial records is supposed to be first and foremost for you in your business to make those critical decisions that you have to make. Let me extend that by saying also in your personal life, you have to keep your financial records to be able to make key decisions when it relates to you.
Mr. Joseph, you've given us our entire question list this evening.
Seriously.
But thank you for sharing that. As you can see, these two institutions add a lot of value to us, both as individuals and small businesses. And I'll redirect to Mr. Hille. Your institution, Surgical, offers insurance products. Now, in discussions with individuals, you may hear them be a little hesitant when it comes to insurance because they believe the only benefit from insurance is when they pass away. Can you share with our listeners what are some of the live-in benefits of having insurance?
Okay. Before I go to that, I wanted to add a piece to what was just shared. It's also something that is widely used in the foreign markets, but we have not really jumped to that level in the Caribbean as yet. It's something we call keyman insurance. We heard about the importance of skill sets key persons within institutions. And oftentimes, based on the nature of your business, that skill set, if it is lost, can result in the failure of the business. There is a form of insurance where the business itself can own a policy on the life of a key person within that entity. So it could be a financier, or it could be someone that the company spent thousands and thousands of dollars to train and develop. Because you have to recognize that, as was rightly said, if you have invested so much in that individual, and then that individual leaves this earth, unfortunately, then the business is faced with the situation of trying to train someone else or hire someone else that has that skill set. So this is where Keyman Insurance comes into play to ensure that should that happen, then they automatically receive that capital injection to either hire a write-out or train someone else. So it's something that a lot of businesses can use, and it's something that if you realize that you are the key person in the business, you can have that conversation with us. And it can also apply to you if you are a sole proprietor with the vision of leaving the business behind for your family. We have a lot of family-owned businesses in Dominica, and some persons have this dream and this vision of making sure that that business is their legacy, and they would train their children and want to ensure that the children can carry it on. Keyman Insurance can ensure that when the children do come into play, because we will die at some point, when they do come into play, they will come into play with that capital injection to be in a position to expand in the business one time, and you could come to the NDFD if they miss that skill set that is necessary to bring the business forward. Now, in terms of living benefits, so I mentioned earlier that insurance is not just about death. Traditionally, that's how we saw it. But it has evolved over the years where you can use different products for different purposes. I will share a story just to start off this explanation. A lot of people do not know that Disney World was financed by insurance. Now, the story here is that when he had Disneyland somewhere in, I think, California, he had his vision of something more big. He went to the banks. He shared the idea with them. They told him it was crazy. They did not see the vision, but he believed in himself. He had a life insurance policy with cash value. He accessed the cash value from that policy, and then he used that to start the works for Disney World. And we see that today, Disney World is one entity you cannot ignore. It all started through that life insurance policy that gave him the sort of backing he needed to start the work. That's one of the living benefits that exist. We, as I mentioned, we have several policies. If you are looking just for a case of, we have that available. But if you're looking for something where you can develop funds over time that you can access, that is available as well. Obviously, it's going to cost a bit more than the standard policy. But if it's something that's in line with your goals, then it's something that you can pursue. And the key thing is it has to be in alignment with your goals. Everyone has different plans. So when we advise persons, we always ensure that the plans they choose, the solutions they choose, are in alignment of what they want to accomplish for themselves. One of the key things about using insurance, some people term it as being your own bank, is that when you come to the point of accessing those funds, you don't have to fill out any long questionnaire. You don't have to provide, source of funds or proof of income. You don't have to go through this story that you will go through the banks. No offense to the bank. But it gives the person more freedom to take control of their finances as they see fit. But we've heard it earlier, and I will echo the sentiment. Just because it is available does not mean you have to access it. If you do have a need for it, where you can either increase the value from it, or if you have some sort of emergency that requires an outlay of cash, it is a backup plan. And it's available to everyone. The younger you are, the more affordable those plans are. I have met several people over my 13 years who say, boy, if I had known that, I would have started a plan from 20 years, because at this point, I would have had so much cash value that I could use. And I can speak for myself. At the age of 27, so I used cash value for my friend for vacation. And I had the liberty of paying it back at my own pace. No one called me and said, hey, Renton, you need to make a payment today. You pay back at your own pace, at your own frequency. We are able to work with you like that. We encourage you to pay back because it's basically accessing some of the life insurance funds. But there are many benefits. There's the other benefit where I spoke about income replacement. And we call it critical illness. Some of you might have heard cancer plans, but our plan is not just about cancer. We cover 21 critical illnesses that would most likely keep you away from work for an extended period of time. So things like coma, benign brain tumor, major burns, if you lost any of your arms, things like that, 21 of them. And what happens is that if you are diagnosed, you receive that money up front. And it helps to address what I call the invisible cost of getting better. The reason I say it's invisible is that whenever we fall sick, the first thing we think about is the medical costs. What do I need to pay to the doctor? What do I need to pay for the surgery? That's always at the forefront. But based on the illness, there's something that we forget about. If I had a mortgage to pay and I fell sick, I got cancer, will the bank tell me, don't worry, get better. When you come back, we will talk about the monthly arrangements. I mean, I know they would up to a certain point, but they cannot do it forever. And this is where the income protection helps with the other side of being sick. So it replaces the income you would have lost. So while you're getting better, you don't have the financial burden. You can focus on getting better while you take care of your rent, take care of your mortgage, take care of your bills and whatnot. So all of these are options that are available, but it's based on that individual composition. I'm not going to tell everyone buy this, buy that. No. We all have different priorities in life. We all have different levels of risk in different areas, and it's based on the conversation that we have with individuals, you'll be able to recommend where you should go first. And it's a journey. You start with one policy, just like you're building your house, you start with the foundation, and then over time, you build upon it. I started my first policy at 24, and I am 37 or 38, I'm getting older, and I have 10 policies right now. So I've been building my portfolio as time goes by. So we can help in different areas, but we can do it on a step-by-step basis.
Brenton has 10 policies. He's not telling you to buy all, but at least ensure that you have one. And I'm happy you mentioned the use of the cash value. While you used yours to go on vacation, I used my cash value to start my bachelor's degree. And I did not have the hassle of having to pay it back while I was overseas studying. So thank you, Brenton, for sharing that with us. Mr. Joseph, our theme for Financial Information Month is Wealth Creation for Financial Resilience. And we live in a country that aims to be the first climate resilient country. The NDFD has a particular facility that speaks to resilience and innovation and renewable energy. Can you tell us a little bit more about that?
Yeah, thanks. Let me start off by saying wealth creation important for everyone because we're getting old, right? You said?
Yes.
So which means that we have to build something that we can survive on and live on and hopefully leave for our survivors or beneficiaries down the road. So you can do one, do the insurances, and I'll encourage anybody who can do the insurances. I have a few policies myself, not 10. Okay. Maybe 10 minus 0, we'll leave you with 1. But so that is one way. But when it comes to that, you must have a way to pay for it, right? So you can, one, generate the income by coming to NDFD if you have an idea to start off a business, product, service, combination thereof. And then you can use that to pay for the insurance, which also in itself builds some wealth down the road that you can utilize. Right. So we also are cognizant of the impact that our activities as human beings are having on the climate, on the area that we live. We look at the amount of floodings that we have, the level of garbage that's kind of unsightly, unbearable, that we generate, the waste from our activities themselves, what we do with them. And these all impact us in some way or the other. Right now, I didn't used to sleep with fans, but I have to do that now because it's kind of unbearably hot at night. So our actions do impact us. But we have to continue doing what we're doing. So we need to do it with a consciousness that whatever we do, every action, there's a reaction. This is the law of motion. So what we have done over the years, from 2017, we started a project, and that was just before the bad girl, Maria, where we started thinking of being more, resilient, more environmentally friendly with our actions, and beginning to take our clients with us as NDFD. So we did some research along and financed by the Inter-American Development Bank, IDB, and we did our market studies, our market research, research technologies that would enhance whatever we're doing, and we came up with a product, all right? And when we call it our green products or green loans. But again, as we say, we do not only provide finance, because this is just one leg. So we also developed a specific program that we call our Green Innovation Summit, where we encourage persons to come in with ideas, and we host it over a period of, I think, 3 months, every 2 years. So the first edition was in 2021, and we had the other one just in June of this year, where we invite persons to come in with their ideas, and we immerse them through a series of trainings on every aspect involved in business creation, business development, and business functioning. And the areas are not just financing, how to use finance, and those things, but also we teach them how to pitch an idea to an investor if you don't want to take a loan, and there's a potential investor that you can target, so how to present that. We also do sessions on person's physical health, on person's mental health, so we immerse persons and prepare the being to be able to undertake that venture, because this is critical. If you're not well, you cannot operate properly. If you do not have the proper skill sets, you cannot run the organization properly. And we do that thing. We provide training on legal issues, how to register your business, which is the best format of registration to use, how much financing you use, when you should use loan financing versus equity financing. So those are the things. And so this has culminated in us having what we call a green product. And typically what we target is to introduce our clients to technologies that are more environmentally friendly in terms of the impact on the environment, in terms of the emissions, in terms of the waste disposal, in terms of the consumption of power is much less. Now, what this does is that it reduces things like your operational costs down the road. Now, one may want to argue that I get that, but the cost of these things is a little bit prohibitive. But you can make up for it with the savings that you have during the operation. So, for instance, if you are operating some business that uses, let's say, a refrigerator, you want to go and purchase one of the older refrigerators, which is cheaper, $1,000 maybe, or you have the one that you can buy for $1,500 or maybe $2,000. But this one, because it consumes so much less electricity, it will reduce your power bill, and that you can help to offset the cost of it. There are other technologies that we use in terms of if persons want to. Typically, we see what's happening now that you have so many frequent power outages. So as an individual, as a household, you want an alternative source of energy. You can invest in a solar-powered system to be either an emergency or the alternative to the grid, the power company. And this them says, yes, the initial investment is high, but over a period of 3 to, let's say, 7 years, you can recover that cost, and everything after that is essentially return on your investment. So these are the types of technologies that we finance in that. And every industry can find some sort of green technology that you can incorporate in your business to ensure that you reduce the operating costs, you have less of an impact on the environment that you live, and then you can be more profitable in what you do. At NDFD, we have converted all our equipment into what we call energy efficient technologies. So from our air conditioners to our printers, our computers, our lights. If you look, we have all LED lights. You know, our AC units are all inverter types, and they consume up to 50-60% less power. So we moved from an energy bill of $5,000-$6,000 to about half of that.
Impressive.
All right, and small businesses can utilize that sort of technology.
Thank you for sharing that. And as we wrap up this evening, because we could go on, we love talking about financial information. Brenton, can you share with us your wealth tip for someone under 40 and someone over 40 on how they can use insurance to build wealth?
Under 40, over 40. I don't think that I can think of one. Bear with me to say a few. One of the first things that one should consider is health insurance, generally speaking. These days, a lot of financial gurus actually say that in your budget, health insurance should be a part of the main component, the needs category, not wants, but the needs. And the reason why they have started pushing it towards that direction is that health insurance in itself is protecting your wealth. And we've been speaking about wealth, we've been hearing about wealth. When a medical emergency arises, if you have to depend on your savings, that is going to disappear like this. And at the same time of it disappearing like this, it still might not be enough to bring you back to the state of how you were before. So I tell persons it is impossible to save up for medical emergencies because we cannot predict it. I don't think anyone in this room and on this live has had a conversation with God and God said, hey, I'm going to give you cancer in the next 5 years, so start saving up for it. It's impossible. So as a baseline, I think health insurance, both for under and over 40, is something that we should all consider as a means of protecting our wealth. Now, for the under 40 specifically, I will speak to one. There's a saying that it is better to buy life insurance or insurance on a whole 10 years too early rather than 1 minute too late. The fact is, in a sense, it is planning for tomorrow. So I mentioned that I got my first policy at 24. Now, at 24, I did not have any responsibility per se, quote unquote. It was really about if I died to make sure that there was sufficient funds to bury me. So I did not have a real need for life insurance, but I still did it at 24. Now, at 28, my daughter was born. So I already had life insurance in place. And at that point, if I had died, at least there would have been some foundation for her that I already started planning for. Now, we've heard from the credit unions, and I guess we'll hear from our colleagues in a while about building. For most financial institutions, you do need insurance as a part of the requirements. So if you know you're going to build a house, it actually is more affordable for you to start that process early, even if you're not going to start the process now. So start the process of insurance early, even if you're not starting the mortgage process now, because the premiums are going to be very low as compared to what you would be paying if you wait for that actual point in time. And the other benefit is that if you start it early, you can get one of those cash value plans that you can benefit from at the end of the period. So when your mortgage is done, it's not just the insurance is done, but you have some access to funds that you can use for retirement. Now, over 40, the health insurance definitely. If you have not started planning for retirement, it's something that is very important. There is the risk of getting too old and outliving our financial capacity. And I tell persons that you can look at society and see the impact to an extent of not preparing for retirement. At my age of 38, I am afraid of retirement because we are talking about living to possibly 100, which is 35 years of no employment, but we have the same expenses. I hear the notion that sometimes retirement is when we have less expenses. We still have to eat when we retire. We still have to go out. We still need clothes. We still have bills. I don't think I've heard any proclamation that our bills will be cut by half because we are seniors. So we still have the same sort of expenses to an extent, but with a reduced income. And to live 45 years like that is scary. So definitely, if you are over 40 and you have not started laying a foundation in place for retirement planning, something that you should start considering.
Thank you very much, Brenton, for your tip. And Mr. Joseph, wrap us up quickly, shortly, with your tip for this financial information.
Yeah, there's one thing. We always associate budget with government, but I believe everyone should have a budget. And as an individual, you need to budget your income. And there are certain little guidelines that we can use. It does not have to be hard and fast. But there is something called a 50-30-20.
My favorite.
Really?
Yes.
And I'm not saying everybody should do a 50-30-20. Circumstances differ, income levels differ, but there should be a level of allocation there. So what the 50-30-20 is that you can decide, okay, 50% of my income or my revenue goes towards my critical basic needs: food, shelter, clothing, medicine, healthcare, whatever. That could also include some insurance. 30% can go towards your wants. And let me just say that the difference between a need and a want is shaped by your culture. So you could decide to cook at home and carry your food to work rather than going to a hotel to eat every day. Or to decide, I always use the analogy that when I travel, especially I stay out for a week or more, when I come back, I look forward to getting a good, fresh, hot broth. But while you're out, you eat the artificial food, I call it. That is not so very healthy for us. So what are our wants? We have to define that. So what it is that I can actually use 30% of my revenue for, or even less. And then there's the other 20% which we say that you should use for your savings. Your savings could be monies that you put in the credit union or the bank, or you purchase an insurance policy. That definitely is part of that. And again, it can be not a hard and fast rule. I know finance institutions have certain ratios that they go by, the DSR and TDSR and all of that stuff. But again, your circumstance decides what it is that you do. But do a budget and put in some figures there and ensure, let me just make a comment now. We have what we call in our society a popular thing that we call CO. How much of CO that we can take. And it will decide the quality of life that the under 40s live when they become the over 40s like us.
Thank you so much to Mr. Hille and Mr. Joseph. Thank you, listeners, but don't leave just yet. We have a bonus chit chat with another one of our Financial Information Month partners, and I will be passing you back over to Sherma while we set up for them.
Very good. Okay, so we're on our last segment. That's the bonus segment. Thank you, National Bank, for coming. I see your banner. 2022 ECCU Bank of the Year. So for those who didn't know, tell us about that.
So basically, NBD is ECCU Bank 2022 Bank of the Year. And this year again, NBD also participated in ECCU Bank of the Year. We are encouraging you to vote for NBD again.
So last year, I know you all took all five.
All 5 awards.
And that is from across the region,
Yes.
From across the ECCU. So congratulations. So next month, in November, we're having the big reveal of who will be Bank of the Year. So all the best.
Thank you.
Check out our Facebook page. We have the post there. We have the link. So if you click on the link, it takes you directly to the voting page so you can vote. Tell a friend, share the link, share the post so everybody can vote for us.
And that's in all 5 categories.
Oh, you have participated in all 5 again.
yes.
So we're looking forward to that. I'll be there on that night.
Yes.
So, NBD. First, what I want to, you all 45 years in the
45
business.
years, yes.
And I know 4.5% of mortgages. That's still on?
Yes, it is until December.
Oh, wow.
Right.
So people
So we are
actually,
extending.
wow. So that is great. I know about that. Tell us about it.
So we have our 4.5% mortgage madness going on. We started mid-May. And initially, it was supposed to finish October 31st. But we know that there are people coming down for the independence. They might be staying on after October, after the independence, after the Creole Festival. So we decided we should extend the promotion. So we are extending it up to December 31st. So basically, you have the opportunity to get your mortgage as low as 4.5%. That's right, 4.5% of mortgage madness. I know it's crazy, right? So we have that going on. And why 4.5? Well, we're celebrating our 45th anniversary, so 4.5, 45. We cannot do 45%. That's crazy. So why not 4.5? So, and if you haven't heard the song, we have our Mortgage Madness ambassador, of course, Asa Banton, who is also performing at the World Film Music Festival. I'm sure you've already heard the Something Crazy Mortgage Madness NBD. So that is ongoing, so don't miss out. We are extending till December 31st.
And that's a long way from where we came from. Like I said previously, when I first took a mortgage, it was like 9 and 10%.
Wow.
So 4.5 is a giveaway.
Yes, Mortgage Madness.
And then we are thinking, we are in Financial Information Month, right? And you are thinking, why 4.5? But we are thinking about our customers. We know how the economy is right now. So with a 4.5 mortgage, that means lower interest. You have more money in your pocket to focus on other expenses. We know you have your children to send to school. We know groceries, a little bit more expensive right now. So we are thinking about you. So this year is the year to take your mortgage, or if you want to purchase land, this is the year. Don't wait until the interest rate goes up next year. Take advantage of this opportunity.
And in relation to the 4.5 mortgage madness, not only do you get a mortgage as low as 4.5, you get 100% financing, a pre-approved credit card, an optional 3-month grace period, and mortgage consolidation. So if you already have a mortgage at any other financial institution, you can switch over, but not only can you bring your mortgage, you can bring all your other loans and get it consolidated at one low rate instead of paying multiple loans at a different interest rate, which will obviously make you spend a lot more money.
Okay, I saw you wanted. Go ahead.
Yes. And we just want to tell our customers, you can, instead of coming into the branch, we have the online option to apply for your mortgage, and we are making it easier for you. Okay, so when you send that application in, we let you know all the documents you need to bring in before we can set up that appointment, because we don't want you to waste your time. We want you to have all your documents. So feel free to visit our website at nbdominica.com to start that process too.
I saw NBD in Grand Bay.
Yes.
When I switched, I saw NBD in Portsmouth.
Yes.
And what's happening?
We have, from June, we've been going to different communities as part of the promotion. So we started in Cochrane, actually.
Oh, wow.
We did, it's our roadshow / pop-up. So we did a roadshow, we did it in Cochrane. Then we went to Portsmouth. Then we went to Grand Bay, of course, during the breakfast fest weekend. So we had to go. We went to the lunch fest on the Saturday in Grand Bay. We did the roadshow there. So we stopped in Louvier, we stopped in Pichlet, and then we went to Grand Bay. And then most recently, we went to Calibishi. So that was our last roadshow. So we On the way, we stopped at Marigot, we stopped at Wesley, and we stopped at Woodford Hill.
Wow.
So next month, we're not doing a roadshow this month, but we will be making pop-ups at specific businesses. So look out for that. But next month, we will have another roadshow. So stay tuned, follow us on Facebook so you can see where we're heading to next. Or you can probably tell us where to come. If you're looking out and you want us to come to your community, to your village, let us know.
Okay.
And this month will be outside our branches at our Hillsborough Street branch and Brayfront branch. So if you don't want to come in branch because it's too full, you can always come outside, and we have our credit specialist ready to assist you.
And I guess you all know, more banking is the thing.
Yes.
I mean, it's almost like if you do not have an NBD account and you do not have more banking, something is wrong.
And then Shema, it's a household name because I can tell you not. Imagine going to credit union and you're asking them to sign you up for more banking, so you know it's a household name, and it's very popular and very convenient.
A matter of fact, that's another institution at a commercial bank. Somebody came in and they wanted to sign up to more banking. Right. So you all have done very well in terms of the marketing.
Yes. And we're continuing to make upgrades with our mobile banking. So just look out, you can top up on mobile banking. So it's very, very convenient. You don't have to go anywhere, use cash, use a card. You simply log onto your phone and you top up cashless, cardless on your phone. You get it top up instantly. You can top up someone else. So if somebody needs top up, they're in a jam, in an emergency, they kind of, they don't have enough credit. Wherever you are, you can top up them up on mobile banking easily, instantly.
I think what I love the most about it is, for example, when I pay people using mobile banking, they're like, I will give you a receipt. I say, it's okay. I have the receipt, all right? Yes. Because once I send them money on mobile banking, I know it's paid.
Right.
So, I put it in the narrative, what is being paid. So mobile banking is actually a very good product. Another thing I love about it is, because I do transfers between accounts, I'm able to stay home and just send some money to my account at Republic Bank, for example, without leaving my home.
Right.
And I would just like more people to come onto the platform. I met the fisherman in Maho, and I said, I would like some fish, but I do not have money. You have more banking? And he's like, I need to go and check them, And like, just bring your username and password for me. I will help you set it up. Yes. So we would really like the vendors, the fisher folks, to really come on. Businesses. It's just that they would allow me to get the fish on credit.
Right.
And I'll say, when I pass him back down, I will give you the money. But mobile banking is really the way to go. So you all probably would want to consider reaching out to the fisher folks and the vendors and so on.
And right now, Shuma, we are expecting a lot of diasporas, you understand? And then, they want to purchase items from our small businesses. For example, NDFD, they have Creole in the street. So we want to encourage our small businesses. If you don't have if you don't have an account with us, come and open an account so you can sign up for mobile banking, because it's very convenient. Your people can pay you, because sometimes you don't get the chance to go in the bank, and people can just pay you via mobile banking for any products. For example, last year I went to Creole in the streets and I wanted to purchase some products from JD's Natural, and I could just pay via mobile banking. It was very convenient. So we're encouraging the businesses for independents to come into the branch, and you don't even have to come in the branch. You can sign up online, open an account online, and we'll schedule an appointment for you to come and
so NDFD, we would want you all to encourage your vendors to sign on to the mobile banking platform so they can get paid. So mobile banking now, even my daughter has a national bank account, and I said, when you come to Dominica, please sign up for mobile banking, because what she's doing, it look now, every appointment that you're making, whether it's for nails, for your hair, for face, they want a $10 or $20 deposit. That's the new way to go.
Yes.
So you have to secure that appointment with a $20 or $10 deposit. So she's like, Mommy, can you mobile bank whoever, the $10? And I like, Shemaya, tell me that's adding up. Because it's like the hair, the eye, the this, the that. So it's important when people come down to Dominica, sign up for mobile banking.
Yes.
And then, Shoma, you said a while ago in terms of, you can just transfer your funds to Republic Bank. So if you have your account with us, for example, that's where your salary comes in. That's where savings, you have to think of savings. So you don't have time to go to Republic Bank. That's where your savings, you save your money. So you can use more banking to just, transfer to your, and then you don't go, oh my God, I didn't save this month. No, you cannot think like that.
But you don't have time.
Use more banking to transfer your savings to your other account for different institutions.
Yes.
Okay?
I do it all the time.
Yes.
So feel free to leave our viewers if any tip that you would like to or anything you want them to know.
Well, the first tip, hopping on the mobile banking, is to use mobile banking. Not only did we mention all those features, but to use it to track your spending. A lot of people sometimes prefer to take cash, but for me, anytime I take cash, the money disappears. Yep. I don't know where it went. I don't know what I spent the $50 on. I don't know anything. So if you use your card, which is linked obviously to your mobile banking account, you can see where that $50 went. You can see where that $20 went, and you can see a trend. You can track your spending rather than just using cash for everything. Use your debit cards so that you can see your spending patterns. You can track. When your salary comes in, you can see what day it came in, what time. When you make a transfer, when you pay someone, you can see you have that documentation, you have that record, which is very important. So we highly encourage people to use mobile banking, use your debit cards, and for some persons, credit cards are also a big thing. Because I don't know, Dominicans have a phobia of credit cards, I don't know why. But a lot of times, sometimes, your salary might not come in on time, and you have to make a purchase, or you have to do something. If you have a credit card, that's like backup money. So you have it there, you use it when your salary comes in, you simply just pay it back.
On time and in full.
On time and in full. Your account is balanced again, and you have it there for another emergency. So make the use of the tools that are available to you. We have these products to help you to spend better, to manage your finances much better rather than just using cash for everything. You don't need to use cash for everything. Use your cards, use mobile banking.
Yes. So you wrapping up first?
Oh, you want to wrap up? Okay, great. So again, we just want to encourage our viewers to come into NBD, to sign up for products, sign up for more banking, our savings account, our 4.5 mortgage promotion right now. It ends December 31st. So don't miss out on this opportunity. We don't know when we are going to have this.
That's the lowest, right?
That's the lowest.
That's the lowest. That's the
lowest. So, come to us. Don't say, oh my God, I don't think I can afford that mortgage. Come to us. We will discuss all your expenses and how you can manage to pay back your mortgage. Okay, so
it might just be
for you.
Building a smaller house.
Yes.
So that's what it is.
And you don't need a big house right now. 2-bedroom house. You understand?
That's quite fine.
We can remember Maria, and people live big houses. They lost their home and they say, I can never build a big house, or I can never encourage someone to build a big house. So a 2-bedroom house, very convenient. Come to National Bank, 4.5. You can get this interest rate anywhere else. So visit our website or come in branch. We have our 4 branches. You can either go to our Bayfront branch, Hillsborough Street branch, Capefield branch, or Portsmouth branch.
Okay, so thank you, our folks at National Bank, 4.5% mortgage badness. We'd like to say thank you to our MO News viewers and for all our partners who participated this evening. We're saying good evening and have a blessed rest of the evening.
Good evening.
Thank you, MO News.
Thank you.